A well-known financial expert believes that the founder of Strategy, Michael Saylor, is actually harmful to Bitcoin and could even contribute to the destruction of the entire cryptocurrency. We're going to dig into this topic in today's video, look at whether Strategy might be preparing more Bitcoin sell-offs, which economic events could create serious turbulence in the market this week, and how much crypto Drake lost after betting on Conor McGregor. You already know the ways to support us. Like the video, drop a comment and subscribe with the notification bell. Big thanks in advance. The crypto world is once again full of sparks, this time between Michael Saylor and one of Tesla's most famous investors, Ross Gerber. Gerber practically blew up social media after claiming that Saylor is destroying Bitcoin through reckless leverage and market manipulation. The trigger for the latest attack was a bizarre AI video showing Saylor in medieval armor fighting bears. Gerber didn't find it funny at all. According to him, stunts like this only highlight how dangerous Strategy's approach really is. Gerber has been criticizing Saylor for months, but this time he was especially direct. He says Saylor once promised he would never sell Bitcoin, only to later break that promise and trigger waves of liquidations. In his view, corporate whales, led by Saylor, are the main reason behind the recent volatility. Big players are so greedy they can't get enough when times are good, Gerber said. His criticism didn't stop here. He attacked Strategy's business model, calling it extremely risky. The company takes on debt just to buy more Bitcoin without creating real value. He even mocked the idea that this strategy is sustainable. Is the plan to sell low out of desperation? Gerber suggests an alternative. Instead of stuffing corporate balance sheets with Bitcoin, he believes the best long-term way to manage digital assets is through active ETFs, which allow capital gains to be deferred almost indefinitely. Tension between the two continues to rise, and the question remains: is Saylor truly the savior of Bitcoin, the role many believed he held, or the man who could drag it into its biggest crisis yet? Let me know your thoughts in the comments. After all the criticism aimed at Saylor in recent days, the attention on him was enormous. And right then he posted something new on X. A short but very suggestive message. Instead of explaining anything, he simply shared the famous chart with the orange dots, each dot representing a Bitcoin purchase by Strategy over the years. What stood out was the caption. Saylor wrote that these dots tell only part of the story. It's important to remember that he posted a similar hint just a week ago, and the very next day Strategy announced its largest sale ever, over 3,500 BTC. In other words, Saylor has a history of warming up the market with cryptic posts right before making a big move. Context matters. Strategy now has a new financial framework that gives them far more flexibility. They can sell small portions of their position, raise cash, pay dividends, and fund new purchases, all without changing their long-term plan to hold Bitcoin. This means the company can make tactical sales without abandoning the idea of BTC as a corporate asset. So the big question is, after this new post, is Saylor preparing another massive buy to boost market confidence, or is Strategy gearing up for another controlled sale to secure liquidity, potentially adding more volatility at a moment when Bitcoin is already sensitive to every move? By the time you're watching this, the answer might already be known, and whatever it is, it likely impacted the crypto market. This week, the crypto sector isn't focused only on Saylor or Strategy. Several key economic events are coming up that could shake Bitcoin and altcoins. We'll get unemployment data, corporate earnings, and macro indications from the US, but the main spotlight is on Tuesday, when inflation data for the world's largest economy will be announced. If CPI comes in lower than expected, it signals cooling inflation. In that case, markets usually react positively. Bitcoin could jump sharply and altcoins even more. Investors are starting to price in potential rate cuts, which always brings optimism to crypto. But if CPI is higher, everything changes instantly. That would mean the Fed will likely keep interest rates high for longer, cooling risk appetite. Bitcoin could drop below key levels and volatility would return with full force. Altcoins, being more sensitive, could take even heavier hits. And to wrap things up, let's finish with something lighter, although for one person it was anything but pleasant. We're talking about Drake, the rapper known not only for his hits but also for his remarkable talent for losing huge sums when betting on sports. This weekend he decided to support the world-famous Irish fighter Conor McGregor, who returned to the cage to face Max Holloway. Drake placed $1 million in Bitcoin on McGregor to win, which would have earned him around $1.85 million if Conor had pulled it off. But Conor was terrible. He injured his right leg and the referee stopped the fight in the first minute after Chandler unloaded a barrage of strikes and was awarded the victory. And just like that, the Drake curse activated once again. This is an internet phenomenon claiming that any athlete or team supported by Drake usually loses. The list is extremely long. Years ago, Drake supported Anthony Joshua, took a photo with him before the fight with Andy Ruiz and bet $100 on him. Ruiz, if you remember, wiped the floor with Joshua. Then Drake bet on Barcelona to win El Clasico, but Real Madrid won 3-1. In the last Champions League final, he bet $1 million on Arsenal to lift the trophy. PSG won on penalties and Drake burned another fortune. That's all for today, team. Have a great and successful start to the week and see you tomorrow.